Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for September 10th, 2014. Let me start off with a couple of critical observations on the market. We are in a topping process. I'm going to show you a couple of internal indicators and pattern symmetries which say that we will, over the next, possibly after the 18th or 19th of September, be coming down for a sharp, quick correction, and I believe there will be a much larger correction as the Fed withdraws QE completely around the October time frame. Once those jitters are over, the market will find its own footing, in my humble opinion, and that will end the year in a very powerful note, on a very powerful note. Now that all kind of falls in within a pattern symmetry that I keep on showing. Now keep in mind, these pattern symmetries are very valid. They tend to work 80 to 90% of the time. If you review my previous video cast and have followed me since I launched this service in on April 15, 2014. However, the timing remains, the exact timing stays uncertain due to the heavy involvement and manipulation by algorithmic high frequency trading programs. Case in point, yesterday we had a sharp move up. We had currency devaluations taking place across the board in Europe for reasons that I've explained several times. The Scottish referendum for independence. You had issues. Well, primarily that was one of the issues which caused the British sterling pound to drop tremendously. I believe the British sterling pound dropped more than 10%. Just imagine, you wake up and in a week the US dollar is down 10%. So an asset that you bought, realistically speaking, with US dollars, all of a sudden loses value 10%. That's 1% a day. So you buy a $100,000 car, okay, and then 10 days later it's worth 90,000 for no other reason other than currency devaluation. So that's pretty much in if you look at the broader picture, what happened in the UK. There were a lot of fears. I don't want to get into it too deep, and I've mentioned this a couple of times in my missives on the Twitter feed, as well as on my end of the day commentary reports. There's a lot of fears that if Scotland really took it seriously to separate themselves, there would be repercussions on the banking side, there would be repercussions on the energy side. North Sea oil, a lot of the rigs are off the coast of Ireland. Of Scotland, and all kinds of stuff would happen, which would disrupt the overall balance and stability of the UK British markets, which would in turn affect the Eurozone and the global markets. England being a very powerful economy. So saying all that, look what happened today. All that crazy choppiness, shooting up, giving back everything, no rhyme reason. I mean, there's obviously a reason behind it, and I kind of pointed it out several times. But still, shook everyone out, and look what happened today. It just went berserk on the other side. So what I'm trying to get at is that I try, and I'm very successful in navigating these markets within the realm of what's out there. I cannot do it on a minute-by-minute basis, but the overall general predictions and forecasts that I do are correct. And feel free to go back and review all my video casts. Everything's out there for everyone to see. It's not just me just going on a rant. So try to understand what I'm trying to say, and study and move on. Quote that I read the other day stuck in my head: the past is a point of reference, not a point of residence. So don't live in the past. We all have baggage on things we did or we didn't do, trades we did or we didn't do, and things that we did in life or didn't do. But the reality is, as the old saying goes on Wall Street, you can't drive forward looking at the rearview mirror. So that's exactly what we got to do as traders, okay? Get up and move. So, saying all that, let's start off with the Dow Jones Industrial Average. I want to show a broader perspective here on the daily basis. This is the channel. I've shown this several times. This is the lows on November 2012 lows, when the acceleration period, I call that, started. And this is the current acceleration period that we are going through. upper end going through since the big correction in February. I've mentioned several times, and so far I've been very correct, that this pattern that we're seeing is very similar to this February pattern. Okay, so because the internals were very similar to what happened in February. Just let me get my drawing tool out here. Once you understand all these things, you don't get too worried about what goes on in the markets. Things don't happen that just randomly. Everything is controlled, everything is manipulated, and the behavior never changes. So like I've always said, that every crisis is the same for different reasons. And mind you, that same thing applies to our lives. So, saying all that, this is the channel, very well defined here, as I've drawn it. And you can see here the top end of this channel is 17,500. That's roughly about another 440 points from here, or 430 points. And the bottom end of the channel is around 16,500. So you got 1,000 points range. At this juncture, you can always, you can clearly see that we have this is the 22-day moving average. This is the 9 moving average. We're definitely in a topping process. Looks like we could turn around and change this completely. This could be just a minor bull flag. You can draw it like this. You can draw it. You can draw this as a bull flag, and the next thing you know, different scenarios, it just goes up, right? The other option is that it goes like this. It tops, comes down, tests this 34, which hold a strong support around 16,800 or so, and then this is basically reverting back to the mean. I explained this before, and then move from here. Or it breaks down completely, comes down to 16,500, which would be a very optimal situation, and then from this point we start to move up. So there are different scenarios that I just explained. So looking at the internals, let's look at this carefully. Okay, Dow Jones Industrial Average, similar to others. Internals tell you a big story. Okay, we have OBV still rising, so that's good. On balance volume, that's net volume buying, volume buying, buy volume minus sell volume. Look it up in Investopedia. Said that a zillion times. Look it up on Google. The definition of that. So this is crossing over. So if I look at a pattern of symmetry, this was very similar. I pointed it out way back, right at these lows. Okay. So it did this, and then it eased back. So it's doing this, and it eases back. So it doesn't really collapse, it eases back. So it eases back here, and then probably zigzags around like this, like it did here, and then move up. So we could have this type of move here, and then, pull back a little bit more, zigzag around a little bit, and then try to move up again. And that's what happened here. At one point or another, top end of the channel is going to get tested. Whether it gets tested in the month of September, which is likely, who knows? I don't know. I don't think so. Or it happens in the month of October after the correction, I don't know. But I'm just letting you know that's pretty much what's going to happen. Let's look at something here which also is a good determinant of longer term swings. That's known as the Kapok curve. Okay, good old Dr. Kapok. I've showed this before. So for new members and subscribers, welcome. And the Kapok curve is a great tool. Look what happened to the Kapok curve in both of these instances. Again, look up the definition of that. Dr. Kapok, I believe. So every time it goes like this, it's a complete buy signal. I don't care what the media is saying. I don't care what people in the chat room are screaming about. Actually, more the screams, the better it is for buying, as we all know. And what the media is saying, or what people in StockTwits are saying, and all the gurus are saying. This is what tells the truth. At this point in time, you can see the wave. It's like a sine wave, right? It's starting to ease back. So it's probably going to go like this and zigzag around a little bit without crashing. It's my feeling. Go like this, and then it starts to move up again. So that could be the minor correction that we see in the middle part of this month. After the 18th or so. I don't think they're going to crash the market before Alibaba IPO and all that stuff. 19th is the Fed meeting, I believe. So that's probably where the boat gets rocked, okay? And then they pick it up at the end of the month. Gang rush it, window dressing, same old story. So just keep that as an outline. Let's move on to the different charts now. S&P 500, the Russell 2000, and all the others. This should give you a nice overview on the Dow Jones. Thank you for listening.